I've been with Fundrise for 4 years now. I started in 2020 and we went as high up as 40% positive sometime in 2021 and 2022. And now, in the beginning of 2024, end of 2023, I look at my account and it literally says that in the past 4 years, total annuals return is 0%. That means I have made no money from keeping my money in Fundrise. I've lost no money by keeping my money in Fundrise, but in fact, because of inflation, I probably lost 20% of my account value since I am pretty much just dead in the water with the software program or whatever this is, investment platform. I'm super disappointed. How do we go from positive 25,000 on our account to freaking negative $397, which is 0.3% decline in 4 years? When we compare this to Bitcoin, that's up 500% since 2020 year to date. And then we look at SPY, which is up about 40 or 50%. Listen, we need at least a 7% annualized return, right, per year. This is the bottom line. I mean, I could put my money in a CD account or a high yield savings account right now and get freaking 5% on my money. Instead, 0 in 4 years. 0. So let's look at this miserable excuse for an account that is worth, as of now, $117,000, which is pretty much all of my money that I worked for and I put into this account. Now let's take a look and see how disappointing this has ultimately been in the last 4 years. And obviously compare it to things like Bitcoin, SPY, maybe actual freaking physical real estate, which my rentals are giving me about a $700 profit each every single month. Let's take a look. Okay, so here it is. Here is the account of the lifetime. Let's take a look. We have account value $117,000. Which is, now let's look at the net return. Now, parentheses means it's negative, so we're minus $397 in 4 years, and says net annualized return negative 0.3%. Wow. Now let's scroll down here. We can see that the current account value, it shows the exact same number, and this is net contributions. Now, this is what I want everyone to look at here because, well, these two numbers, account value and net contributions, are pretty much the same. That means all the money that I have in Fundrise is what I have put in there. There's no returns, right? So might as well keep this in the bank and get 0% interest, or maybe open a high yield savings account and get 5% on it. As you can see, this graph looked promising somewhere between, midway from 2021 all the way up to midway of 2023. As you could see, this dark brown line is the account value, and this light brown line is the net contribution. So if, let's say, we go to this is July of 2022, we could see that the account value was $72,000, net contributions were $57,000. That's a $15,000 positive net return on my investment. But the further we go to 2023 and 2024, out of nowhere, these two lines start tracing each other pretty closely, which is super disappointing at where we are now, because now we're at the same point where we started. What's the point? What's the point? Let's click on more details. This is the same chart we looked at before, but what I want to do is I want to scroll down, and this actually breaks down year by year, right? So what we're going to do is we're not interested in individual funds, so we're going to just close that. What we're interested in is this net return over here. So 2019 doesn't really count because I opened my account like January 31st, 2019. But look at 2020, positive 10%. 2021, positive 29%. Oops! 2022, we pretty much broke even, negative 0.2%. Now, 2023 wrecked us hard. 12% decline. 2024, supposedly we're going up now. And of course, their famous letter to investors that they sent out saying, hey, we're at the bottom now. Well, guess what, Fundrise? How you know you're at the bottom? How you know? You didn't know before. Now, I don't know where you're calling the bottom, saying the interest is going to go up and the value of the real estate is going to go up. I don't know. Ain't no value of no real estate decline here on the East Coast. And definitely not Florida, and definitely not by 20, 30, 40, 50% like what they say. Maybe 5 to 10%. Maybe 40, 50%. I don't know where they're doing their investments. No value has gone down that much, especially in the city. So I don't know what they're talking about. I think they're just trying not to freak out their investors, because this is the worst performing asset out there right now is Fundrise. Meanwhile, for the past 2 years, they kept, tugging their horn saying, hey, we're the best performing asset out there. Comparing it to SPY, physical REITs, Bitcoin, whatever it was. What about now? Now you're the worst. Literally gone nowhere in the last 4 years. Whatever money we put in, that's where we at for most people. Disappointing to say the least. Now, in order to even get to an average normal 7% return that you should have per year, we need to pump like crazy with Fundrise, right? We need to make up for the last 4 years, which because now we're at 0. So the last 4 years needs to be 7, 7, 7, 7. Over long term. So that means we need to pump 28% sometime this year, hopefully, or sometime soon in the future, in order to even make this compete with just your ordinary investments in SPY, lower risk investments in these ETFs. Broad market ETFs are doing much better. My account in M1 is just full of whole total world ETF, a developing world ETF, developed world ETF, SPY, QQQ, and we're up freaking 20% in the last 4 years. We're not at 0. So what is going on? How are we gonna pump? How are we gonna make up for these last 4 years? We need to get 28% up there, and then on top of that, if we're taking the bigger risk by investing with Fundrise. So the returns need to be risk adjusted, right? What's the point of me putting my money into a risky asset if I'm getting the same return as if I was to put it into the SPY? What is the point? I don't get dividends here. So disappointing at this. I don't know how they're going to pump. I don't know. I have no idea, but I hope they do. But let me tell you, when they say, wow, we have the best year. Yeah, well, unless it's the same as 2021 where we pumped 29%. But we need to stay up there. We can't go back down. That's the only thing that will restore my faith in this platform, which I don't know what's going on. Are they making up numbers? Like, what's going on? Look at Bitcoin. This is Bitcoin. Let's go. Let's take it 2020. Where's 20? This is 2020. All right, this is January 2020. And let's go to today. Let's go to today. 525% pop in the last 4 years for Bitcoin. 528 or 25% pop. Let's look at the SPY. Let's do the same thing for the SPY. Where's 2020? January 2020. Here's your January 2020 up here. Not even down here. This is COVID. We don't care about that. Starting from the top. And then we go to where we are now. 46% for the SPY. Come on, Fundrise. What are we doing here? That's $117,000 that were just sitting there pretty much for nothing. We need to get back up on this. We need to get these really good numbers. I mean, I need positive after positive, and I need outweighted positives. I don't need no 10%. in 2024. Okay? I need 15 in 2024. I need 15 in 2025. And I need 15 in 2026. And then we're pretty much on par with the general stock market. We're never going to catch up to Bitcoin. That don't matter. Just forget it. But at least with a market. And that's just break even with the market, guys, because we're already falling behind. We're already falling behind. We're at zero. The stock market, SPY, is at 40%, 46%. So we're already 46% behind. Oh, people will say, well, this is a long-term investment. You need to look at 10 years. Yeah, well, 4 years is also not a short amount of time. So yeah, we will be looking at 10 years. But we should have, this is going to be the 5th year. We're halfway there. Why are we still at zero? Are you saying in the next 5 years we're going to pump 60%? I don't know. I don't think so. No one knows, but I don't think so. So anyways, maybe now is actually a really good time for a newcomer to Fundrise to put some money in. Because, well, guess what? We're at the all-time low. Even them, in their own article, let me find it here. I'm going to find this article. Buying at the bottom. All right, learn more. Where's that chart? Here it is. Look at them. So they think we're right here, right at the bottom. Hey, Fundrise is timing the market at this point. Meanwhile, for the past 4 years, they're tooting their horn, saying how you cannot time the market. Well, here they are timing the market, saying 2024 will be the bottom, and then we're just going to start going up like magic. You know, we are here. Dish. Really? Really? This flat line is very concerning because this is where actually most of my losses came. And listen, I don't know. I hope this is the case. And I hope we start going up a little bit. But Fundrise needs to work on getting outsized returns, since we as Fundrise investors take increased risk with our money by putting this into this platform. I could have just bought another rental, make another $600, $700 a month just from rentals, instead of waiting 4 years and being where I started, actually losing money to inflation, right? 20% inflation in the last 4 years, and that's probably putting it gently. So I actually lost the buying power of $117,000 back in 2020 was much higher than it is now, right? Right? The answer is yeah. So, you know, I'm still sticking with Fundrise. I'm there already. I'm not going to pull out now. I'm going to give him another chance, give him another 5-6 years, see what's going on. But if at the 10-year mark, we're just copying the SPY, or we're just, you know, doing the same thing as the general market, then what's the point? What's the point? Just going to take my money out, buy another rental, or just put it into some sort of an ETF and call it a day. What's the point? What's the point? Where's the Fundrise IPO? What's going on? Where's everything? Hello? Come on. But this could be a good time for a new investor, for a newcomer to Fundrise to put some money in, because we're at the bottom. If you put your money now, you're pretty much at the same place where I was 4 years ago, so you haven't missed anything. It's like, hey, start over, dude. You could do it now, dude. You know? So, hey, if you're new to Fundrise, you use the link in the description below. Open a new account, you get a $50 bonus added to your account, absolutely free, in shares. So make sure you use the link below. If you're new, don't get spooked. You know, according to Fundrise, we are at the bottom. So you haven't missed out anything in 4 years. You also haven't lost any money due to inflation in the last 4 years of just keeping money with Fundrise. So maybe it's a good time for some people to start, if you're interested. Not too much, and see how it goes. End of the day, Disappointed with Fundrise for 2023. We'll see how they do in the first quarter of 2024. That'll be my next video. We'll see how they do in the first quarter of 2024. We'll talk about it. Their latest, like, the hard part is over for real estate, at least. So they kind of try and, make their investors feel better, because everyone's looking at all the other investments. They're like, wow, Fundrise is doing really bad. They're saying, well, for real estate, it's over. But for the broader markets, they're saying how 2024 might be when the recession hits. Maybe, let's hope so. Gonna put some more money into the SPY and not Fundrise. How about that? And then they do this whole year-end update. It was actually a very disappointing year-end update, in my opinion. They pretty much just focused on this opportunistic credit fund that they kept talking about, which I don't care. I don't have that much money in there. This opportunistic credit fund, I think, is when they lend out money at a certain interest rate to others. But in a year of robust returns for opportunistic fund, how about your, bread and butter in real estate investors? How about that? How about you take care of us as well? And usually they have a really good year-end letter, a long one, detailed one. This just, like, they're talking about how you could reserve to invest into this opportunity. Like, what are you doing? Like, talk to us about what's happening with real estate and, what we should see in the future. But all you're talking about is an opportunistic fund that did, like, relatively well, supposedly, returns. And then how, there's people that cannot, they missed the window to invest. So now you'll be able to reserve your opportunity to invest whenever those windows become open. So transactions are going to go through automatically if you're reserved to invest in this fund when the opportunity opens up. Who cares, bro? We don't care about that. We don't care. We are excited to announce we're piloting a new feature on the Fundrise platform, investment reservations. What? Dude, our portfolios are tanking. And you're talking about investment reservations? What? What happened to the management team of Fundrise? Did they hire some 15-year-olds? What's going on? Anyways, guys, thanks for watching. We're pretty much where we started 4 years ago. And, let's hope that, Fundrise team is right in their letters saying that this is the bottom and then we'll go up. Better see some outsized returns, though, because this ain't funny. All right, peace, guys. Peace.